Hello everybody, welcome to the Fundamental Analysis. My name is Troy. I'm presenting for AvaTrade. Welcome to the Fundamental Analysis webinar. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on some more responses. If you would, type OK in the chat box if you're hearing me clearly and seeing the screen all right. Okay, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know in the chat box. As always, keep in mind that no one trade is guaranteed to profit. There's risk with each trade that you take. With that in mind, also, obviously, there's good potential for profit with each and every trade that you take. So obviously, that's why we're all here, to try and go about things in a smart way, to go over some ideas to go after those potential profits, hopefully as successfully as possible. Keep in mind that what we do cover is meant to be educational in nature and is not meant to be taken as financial advisement. And we'll go over some ideas regarding risk management as we go through the fundamental news and some strategy ideas. Our WebTrader platform and our AvaTrade Go mobile app specifically have some nice features that assist with your risk management. And so we'll go over some ideas in that regard within our strategies. Now, for anyone who's brand new to things, what is fundamental analysis? It doesn't take long to describe what it is. Basically, there are two main types, and in general, it's the news, fundamental analysis, and there are some types that we look at. One we might classify as regular economic events, like what we'd find on an economic calendar. We'll look at some of those that have come in today already and that will be coming in later today. With regards to economic numbers coming in, interest rate decisions, etc. So there's actually a lot of big news coming in on the economic calendar. And those types of fundamental events are obviously easier to plan for in terms of scope and timing. We know what they're about. We know when they'll be. We don't know exactly for sure what the numbers will be all the time, but at least we know what it's about and when it will be. Then the other type of fundamental analysis involves looking at extraordinary economic events, like the Russian-Ukraine war situation. And in the past, it was COVID or Brexit or things that are not necessarily scheduled, and these headlines come out and they affect the markets. And so you can plan for that within your fundamental strategy as well. A lot of times with pending orders at important price levels that you think would be a good spot to get in, or an indication of momentum in a certain direction if it reaches a certain price, etc. So pending orders can work well to be ready for what you don't necessarily know is coming for sure. And so we'll go over those ideas on the live charts here. And if you have any questions, you want to give any input, please feel free to do so in the chat box at any time. Now, let's look at some headlines. It's usually a good place to start with fundamental analysis, is to see, well, which way is the wind blowing, so to speak, and what's the sentiment, what's going on in terms of the news. And so we can look at headlines and get a feel for it real quick. Fed rally fades, jobless claims are coming in, Bank of England set to hike. They're talking about Bank of England has a monetary policy statement today and rate decision on the interest rate, and they're expected to raise it. So that's the situation there. And the US just yesterday raised the federal interest rate as well. Now, I think the European Union is holding steady and maybe doesn't see the need to do it as quickly as the UK and US seem to feel it needs done to stave off inflation is the hope by raising the interest rate to slow the rise in prices. When you raise interest rates, that makes the money more expensive. So it slows the rise in prices typically and can maybe help lower the inflationary situation that's going on pretty rampant around the world. Now, another headline, investors adjust as Fed hikes, worry about clouds on horizon. So we already said that when they say Fed hikes, they're talking about yesterday, the US decided to raise the interest rate, and actually they said they're going to raise it at each and every meeting, like 5 more times this year. 5 or 6 more meetings on the year, and they've committed, I think, to raising 0.25% at least with each meeting, unless something changes. Obviously, things can change, but that's kind of the outlook of what is expected out of the U.S. We'll see what the U.K. has to say today about their plan moving forward, but it's expected that the rate will go up in the U.K. today as well. So there was a bit of a rally yesterday on the market, specifically in the U.S. with what the monetary policy statement had mentioned. Maybe there was some optimism about their plan, but now it seems people are rethinking that, and the markets are turning a little red on the futures right now, and the volatility index is up a little bit, not much, but we see the futures are red, and there's some worry about clouds on the horizon, meaning this war situation, and then also the effect that increased interest rates will have on the economy. There's worry that it could lead to a recession even. So there's some fears about rate hikes. It's supposed to slow inflation down, but when you slow inflation down, it also makes it harder to do business, and it could hurt the economy as well. So there's some worries about that. And if we look out of the EU today, CPI data came in slightly higher than expected. That's nearly 6% increase on year over year. So still high inflationary numbers coming in. Nothing's been done about it yet, really, with all the low interest rates and stimulus packages that have been handed out all around the globe. The inflationary numbers are still coming in. We see the CPI data. If you wonder what is CPI data, just click on it. It tells you consumer price index. So prices going up more than expected. That's what that means when we see CPI data coming in higher than expected. And then later today, you see the Bank of England interest rate decision. It's expected to go up 0.25%. We'll see what the actual number is. I suspect it will be 0.25% raise, but you never know for sure. What might even be more important is what they say. If it's already expected that the rate will go up and it goes up the amount that's expected, what could be unexpected is what they have to say about it. The future policy after that moving forward, what their intentions are with maybe future rate hikes and other measures that maybe will be taken to try and stave off some of the inflation, which in the end is probably a good thing to lower the inflation rate, but it's maybe hard on the economy as it has to adjust to higher interest rates and less stimulus measures. So then we look out of the US as well. Manufacturing data coming, employment data coming out of the US, etc. So, and if we look down here, monetary policy statement and rate decision out of Japan as well tonight. Okay, so big day on announcements. And then another headline, European Central Bank expects core inflation to fade as energy prices level off. So this is the view coming out of the European Union. I read another article where it says the European Union maybe is not looking at raising interest rates. Not yet. They think there's some room before they need to do that. And so it's interesting then if we pair the pound against the euro or the US dollar against the euro, the pound and the US dollar have reasons to strengthen if interest rates are going to be going up throughout the year, and specifically yesterday and today, interest rates went up and maybe will go up today on the pound. So if that's the situation fundamentally, then you kind of have the strong horse against the weak horse, so to speak. You have the reason for the pound and the US dollar to strengthen, i.e. Interest rate hikes, and reason for the euro maybe to stay weaker because maybe they're less likely to raise interest rates, and the European Central Bank is putting out statements that they think the inflation's not that bad, that as energy prices come down, that the inflation will come down. They're attributing all of the inflation or most of it to energy prices. That could be a risky viewpoint, to think that energy prices might come down as this war is going on still, and there's a lot of fear about supply disruptions of natural gas and crude oil. So we'll see. We'll see what the European Central Bank does eventually. They don't have their rate decision today, but that type of headline, at least in the short term, could lend some bearishness to the euro, fundamentally speaking. Now, any questions at this point before we take a look at the mobile app and then also our WebTrader platform, which, by the way, allow you to trade on your MT4 accounts and your MT5 accounts. It's the same accounts, it's just a different user interface that's more friendly and has special tools that you can trade on with the WebTrader and our app. I don't see any questions popping up, but if you have any, I'll keep an eye out for it. All right, so first of all, let me expand the view here of the mobile app that I'm sharing on the screen. And let's take a look. And I should have charged my phone. I see I'm a little bit low, but I think we'll make it through. If you click on this tab down here in the lower right of our app, it's the AvaTrade Go mobile app. If you haven't put it on your mobile device, I would suggest maybe you should and check it out. Market Buzz is a nice feature for fundamental news on stocks. All you have to do is tap on it. It brings up from Trading Central. They supply you with links to the most trending stocks, and then when you click on the most trending stocks are listed first, and as you scroll down, it goes in that order. So Meta Platforms is trending a lot. That's the company that's connected with Facebook and telecom. Some of these stocks are only on MT5 accounts, so you'd have to, if you haven't already, add an MT5 account from your client area. It's very simple to do. And you can have an MT4 and an MT5. There are more stocks available on the MT5. But if we scroll down here, you see the most trending stocks are listed here. And if you click on any individual stock, it brings up links for articles that have been pulled from the web by the second, literally. You'll see the timestamps, and there are hundreds of articles recent on these stocks. And so it saves you a lot of time to quickly, if you're interested in trading on Meta Platforms, to tap on it, it pulls up the articles and you're ready to go. Okay, you've got the information right there at your fingertips. Now, some other features that we can look at, again, just tap on the tab at the lower right. And I know this is a webinar for fundamental analysis, but once you understand the fundamentals, which we just did an overview, we understand the fundamental situation, reason for US dollar and pound maybe to do some strengthening. There's still some fear on the markets. There's some concern about the rate hikes, etc. So we understand that's the situation. And then now we can go and look at, well, what are some signals that are coming in, either in featured ideas or analyst views? And so if I tap on, say, analyst views, now I bring up some live signals that are coming in, and they're time stamped, and it doesn't matter if some of the signals are an hour old. As you scroll down, they're a little bit older. Okay, they're coming in literally by the minute, 12:25, 12:24, etc. But it tells you the price level that they're suggesting you would get in at within a certain price range, and the suggested take profits, stop losses, everything's there for you. So the signal could be an hour or two old, but it could still be in the right price level that the signal's still valid. So If we take a look now, why would the Japanese or the Great Britain pound, why would there be a signal for it to go up against the yen? It makes sense, doesn't it? There's a rate hike maybe coming on the pound today. That's the expectation. There's monetary policy coming out of the UK that's expected maybe to be what they call hawkish, meaning they're going to maybe be somewhat aggressive to try and stave off this inflation. And so by being aggressive with interest rate decisions, that tends to strengthen the currency if you're raising the interest rate. So it makes sense, this signal that the pound is expected to go up maybe against the yen. We looked at the volatility index, it's pretty low. It's up 0.0 something percent. So there's not a lot of fear on the market. So the yen being a safe haven currency right now, it's maybe expected to be weak today with what we looked at fundamentally, and the pound would be expected maybe to strengthen. So when you look at the signal and you say, okay, I agree with that fundamentally, now you can take a closer look at the signal and tap on it and analyze it a little closer. The support and resistance levels are drawn for you here. The blue level here is the support level. It's an old support level. You see it was resistance and then it broke through here. So that becomes support. And they're saying as long as it doesn't drop below there, then you should buy. Unless it's already reached the take profit lines up here, then the signal's kind of done. And that's what they list here as our preference. When it says our preference, it's Trading Central that's sending this in. It's their analyst's preference. And so it tells you a long position, which is buying, tells you as long as that price is still a support level, look for it to climb up as high as 157.30. So it's very simple how this is outlined. And then it gives you the alternate scenario. You know, what if the interest rate decision today, they come in and they say, nope, we're not raising the interest rate. If unexpectedly they kept it where it is and didn't raise it, you'd probably see the pound weaken really quickly. And so if it broke below this support level, that would be a technical signal that it's a downtrend because it broke below the support. And that's what they're saying. Put a pending order for the alternate scenario. If it breaks below this price level, 155.52, then they're saying sell with take profits at these prices. And so you could do a market buy if it's in a price that you like with take profits up here and have a pending order below this support level. In case it breaks, then you sell and go after take profit down at the next support levels down. That's the way you read these signals. And so this one is a market move back, which is buy backed up by a pending sell would be the way to maybe set up with this signal. And on the buy position, your stop loss would be right below this support level, maybe the same spot where your pending sell position would kick in. Okay, so and all these signals work the same basic way. They give you a preferred direction and then the alternate scenario in case the market changes, which obviously can happen. Like we said, no one trade is guaranteed to go right. But what you'll notice as you look at those signals, they tend to make sense with the fundamental news. If you do a review of the headlines, you understand fundamentally what's happening, and then you look at the signal, then all of a sudden you understand why all the signals for the pound are showing going with the pound and against the other currencies. And if we looked at GBP euro, or euro GBP, I should say, you probably would see that it's going with the pound also. So you almost know what signals you'll see before you look if you do the proper fundamental analysis first. Then you pick the signal that makes the most sense to you, okay? And there are other features I want to show you that are on the app, but I'll show you from the WebTrader because the WebTrader also has the same features. So let me exit this. Don't need to share my phone anymore. And now we see, sorry, I'm shutting down my phone, 1 second, given that it was almost dead. Now what we'll see is when we log in the WebTrader here from the main website, that it has all those same features and you log in right from here. So you click log in and you'll be here, okay? This is probably a good spot to pause. Any questions at this point? Any comments before we get into doing some strategies on the live charts here on the WebTrader? Or just type okay if you're with me. All right, looks like everybody must be okay. I don't see any questions popping up. Again, if you have any questions, feel free to type in the chat box. Now, let me see. This was a position from the last webinar. We put AvaProtect on it. This is a cool feature, AvaProtect on gold, silver, and FX futures. When you open a trade, FX pairings, gold and silver, it has the feature AvaProtect. When you open the trade on a market move, you can add the protection. And so you see here, it's counting down. The trade is protected for another 2 hours and 38 minutes. If I like the profit I'm on now, then I can just close the trade if I want. The protection cost me less than what I'm up. I'll be an overall profit if I close it. If I think gold could go back down with the USD maybe strengthening eventually today, then I could say, you know what, I'll close this trade now. I like the price. Maybe I changed my mind and I don't think it'll make it to my take profit, whatever I want to do. But it's protected for another 2 hours and 38 minutes, meaning if it was at a big loss right now, I wouldn't lose anything from it. Because when the trade closes or when the protection ends, I get all the negative floating added to my account from this protection. As it is now, the trade's profiting. I might choose to close it. I'm going to close it just to get it out of the way. We'll maybe do a new trade demonstration on gold for this webinar. I had a pending order on GBP USD as a buy. Maybe I'll get that out of there because the fundamental news has changed since then. So I'll cancel the pending order. And so we were 1 for 1 there from the last webinar. Okay, so, and by the way, this is a demonstration account. It's funny money, I like to call it. But you obviously can be trading with your real accounts if you wish on anything that makes sense to you from the education that we're going over. Now, let's take a look at, I don't know, Euro GBP, okay? There's reason maybe for the euro to be weaker, like we talked about, fundamentally anyways, and reason maybe for the pound to strengthen with their interest rate maybe going up today. So if I expand this, we'll get a good view of the candles. I see a question popped up. The question is, if interest rates go up, will markets go down? Elias, in general, markets don't like high interest. They don't like high interest rates. Markets went running up when the interest rates were brought down. They went up easier. So in general, yes, that makes sense. Interest rates going up, markets tend to pull down some. But remember, it's expected that they're going to raise the interest rate today. And so the movements maybe could already be built into the current price, meaning the market already pulled down, anticipating the fact that the interest rate was going to be raised today. So it's not always an effect where they raise the interest rate right now, and so the market goes down right now. Not necessarily. And what could happen is, yeah, they raise the interest rate, but then what they say maybe is looked at more importantly because the expectation of the interest rate raise is already there. So it's not a surprise. But then what if they say, yeah, we raised it today, but we're going to be very careful about raising it anymore this year. If they say something like that, then markets will like that kind of sentiment. And even with the rate increase, you could see markets go up, not because of the rate increase, but because of dovish talk along with the rate increase. And so that's why you never know for sure what's going to happen with the markets as a rate increase goes in, because you don't know for sure what will be said in the policy statement that goes along with that rate increase. And so, but you can prepare. You can take a move, manage the risk in a way that it's okay if it goes the wrong way, and have a pending order waiting in case it does go the other way. And so you obviously play the move that you think will occur, and hopefully you're right more than you're wrong. But even if you're wrong, you can still make money because you can have a pending order waiting for the other move. So, but that's a good question. And yes, in general, higher interest rates tend to create some bearish pressure on the markets, on the major indices and stocks. And for that matter, on commodities, because that's part of the idea. Raising the interest rates to strengthen the currency makes the price of commodities go up less easy, or maybe even pulls the price down as the currency strengthens from higher interest rates. That's the hope of these central banks. That's why they would raise interest rates, to try and stop the rising prices or slow them down anyways. Now, as we look at the Euro GBP, or Euro Sterling as it's called, we can see on the 4-hour candles here, support level that I drew during the last webinar, support level down here, and a resistance level up here at the top. And that's 4-hour candles. So, if you were wanting to buy on the Euro GBP, that's not a bad entry point. It's pretty close to the support level. And look, the last time it came down, it bounced up again, and went way up. The problem with that viewpoint today could be the pound might just keep strengthening as they raise the interest rate. And really, once they start talking, that could have an effect to strengthen the pound. But you could think the opposite right now. And what I mean is, a lot of times central banks, when they raise interest rates, are doing it to try and stop inflation, right? Or slow it down. But at the same time, then they always say something to try and make the reaction smaller so the markets don't crash from it, right? And so what you could expect to have happen today is, okay, the interest rate on the pound out of Great Britain goes up 0.25%, but then they could talk dovish to try and lessen the negative effect of it on the markets. And they might say something about being very careful about future hikes. And if you expect that that's what they would do, then you might play this the other way and say, wow, this is an advantageous entry point. I think maybe the euro will gain back after their policy statement that might go along with the interest rate hike. So if that's your feel, then you have a couple options here. If you think, okay, I'll take a shot that it'll bounce again off this support, that maybe they'll talk a little bit more dovish than the actual rate hike effect. And so you could do a market move and buy now, put your stop loss below here, or you could put a pending order just above the support and wait as the rate decision comes in, wait to see if it gets closer to the support level before then your pending order buys from that point. Okay, you obviously could take that either way, and that doesn't preclude you from also putting a pending order below the support right down here, so that if this support level breaks and confirms further downward momentum, you could put a pending order right down here to sell with your stop loss then back above that line. Because who knows, maybe they come out and they not only raise the interest rate, but they talk very hawkish about raising it a lot more this year. Then you could see this come down, the pound pull the euro down right through this support level, in which case a pending order down here would be triggered and you could have a sell position kick in. So you could do 3 moves here, and they don't all have to be in the same direction, and you don't have to be right, you just have to be smart, and you could make a nice profit even if I lose the market move and win on one of the pending orders. And so let me show you what I mean. Buy position, we could use AvaProtect on the market move, so that if it goes down, doesn't matter how far, we get everything back. If it breaks the support and then goes flying back up during our protected period, we didn't have to have a stop loss because we protected it with AvaProtect. So the trade stays alive, and potentially you could end up with a profit you wouldn't have otherwise had you used a stop loss instead of AvaProtect. And we can protect the trade by the hour or by the day. Okay, so 12 hours would get us through well past the rate hike, the potential rate hike, and there are any policy statements that come along with it. So it would get through maybe the strengthening with the rate hike and then the bounce back up with what they say, and you had it protected the whole time. So maybe that makes sense. So maybe I'll protect the market move with AvaProtect instead of putting a stop loss then, because I expect volatility, but maybe I think in the end it'll go up. Okay, and if that's the case, then I put 12 hours maybe to get me through the end of the day. Basically, it gives me the expiry date and time. I can put a take profit up near this line, 84.30, let's say. That's before the resistance up there. 84.30. And then my stop loss, I don't need right now. If the protection's about to end, once the 12 hours protection is getting near the end, then I'll take a look, and then you could go in and add a stop loss if the protection's about to end. You could close the trade and take a payment on the protection. If it's in the negative, you'd get paid back from the protection, or if it's in the positive, then maybe there's nothing you need to do other than add a stop loss somewhere in profit even, or at the entry price, and then let it run, hopefully hit your take profit. You have a lot of options that way when you use AvaProtect. So in this case, I won't put a stop loss. I've got my take profit going, and let's say I'm willing to risk a certain amount per trade. And it's probably a good idea that you have that in mind as you're placing trades. How much do I want to risk during the trade? So if I know, for example, I'm willing to lose, I don't know, 250 per trade. Maybe I've got 25,000 in my account. I'm willing to risk 1% or whatever the case may be. So if you have an amount that you know you're willing to risk, and I'll just make up a number, 250 per trade, then now I can adjust the trade size, and look how the order window shows you your risk and your potential profit and the cost of the protection. It calculates everything for you. So if I'm willing to spend 250 on the protection, then now I can go to a larger trade here. One full lot would cost me 254. So that's pretty close to what I'm saying. So look at my potential profit, 735 to the take profit price that I programmed. So that's about 3-to-1 ratio. And so potential profit to what the protection cost me. So that's an option to set up like that and say, hey, I think this could go my way after all the smoke clears today with the rate decision and whatever talk goes along with it. And if that's the case, boom, you take the trade, and now I'm protected on that trade. The premium cost came out of my balance immediately, and now I've got the protection on there, and I can be patient for 12 hours. There's some questions coming in on AvaProtect. Yes, Tosin, you always have to have enough money available in your balance. In the available part, you see here it says available. When I was opening the trade, let me do it again. Minimize this. If I'm opening a trade, you see here it shows the margin impact. So you have to have, for whatever trade size you put, it tells you how much has to go to margin. You need at least that much available in the available section here to open the trade. And then it will go from available to allocated, the amount that goes to margin. That's the allocated, okay? And by the way, that you don't have to risk everything that's allocated to margin. Your risk is determined by either your protection or your stop loss that you program, and it tells you what your possible loss is if you program a stop loss. Okay, good question. Vanessa, since you've asked that, we've been going over AvaProtect. If there's something more specifically you want to know, let me know. Good question. The question is, can you use AvaProtect on a trade that's already opened? And the answer is no. You have to add the protection when you open the trade, and it's only on market moves. You can't have the protection on a pending order. Okay, so market moves only when you buy or sell, and you have to add the protection at the time you're buying or selling. Good questions. Okay, so we can bring this chart back up and continue the strategy idea here. So we did a market move and we protected it here on the pound, and we're hoping for maybe a bounce back up if that potentially occurs on the movement from the euro pound. Okay, and so let me switch actually to let's go to another instrument and take a look at maybe something like gold. We'll mix it up a little bit. Yes, you can edit trades when you have AvaProtect. You can go in, change your stop loss, your take profit, etc. Absolutely. Good question. All right, so if we look at gold here, we see gold has climbed up here, and now it's dropped down to 1943. Okay, and let's go back to like 2-hour candle view. And so Gold pushed up some today after a large drop. We see the dropping here in the bigger picture, and then gold bouncing back up. Now, gold not that long ago reached its all-time high up at 2,070 or so, and now has pulled back down with maybe some easing on the inflation fears. As the U.S. interest rate was raised, now the interest rate might go up on the pound. So there's reason why gold, which is the #1 safe haven, typically when people have fears about inflation, it's an inflationary safe haven, maybe it has reason to not be as bullish. So you might view this drop where it broke this support level here, okay, support, 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 it broke below that. You might view that as a signal that, hey, that's a change. It broke a support level back here, less inflation fears. Now gold has come back up some. So you might start to view, if you think gold will push back down with more rate hikes coming in the US potentially, and in the UK, etc. If you think that in the bigger picture will help to push gold down, then maybe you view this bounce back up as an opportunistic potential sell price, or maybe a pending order up here closer to this resistance level, the old support level. Just depends how you view that. Now, where it's sitting now, if I drag one of these lines down, you see that's another resistance level here. Resistance, resistance, resistance. Resistance means the price has trouble going above that line. It hit and dropped, hit and dropped, hit and dropped. Then once it went above, it became support. Support. It's a classic thing with technical analysis where a broken resistance level becomes support, and vice versa. Once the support is broken, then it becomes resistance many times. And so if that's how you feel, that this now has become a resistance level again because it broke below it and now it's come back up towards it, then this could be a spot where you say, all right, let me take a shot at a potential sell here. And so if that's your feeling, and I'm not saying that has to be your feeling, but if it is, then we could go in, bring up gold, select, actually sell is what we were talking about here. You can buy if you wish. Select the sell, and again, you can use AvaProtect if you want. Maybe you say, listen, I think it'll drop over the next couple days anyways, but maybe not right now. And if that's how you felt, you could do AvaProtect and just say, okay, I'm going to sell. I'm going to protect it for a couple days. That would get me actually through the weekend and all the way to the 21st next week before the protection ends. So you'd even have the benefit of the weekend that if something happens to help strengthen the USD and lower inflation fears, that gold could go even further through the weekend. And if it goes flying the wrong way, well, you only lost your premium cost. And so maybe big potential profit, and the only risk is the premium. So that could be an idea of how you might trade. And if that was the case, then I would adjust my trade size so that my premium cost is the amount that I find acceptable. And so maybe 15 ounces gets me 16 ounces, gets me to my 250 range that I had made up as an amount that maybe I'm willing to risk per trade. So I could have 16 ounces protected until the 21st. And if it even goes $15 an ounce the right way, $20 an ounce the right way, could go even further, then you've made back the premium cost and then into profits, right? And we've all seen gold move even $100 an ounce in a short period of time. So the potential is there. And if it goes flying the wrong way, well, your risk is capped. In this example, let's do a stop loss instead. I want to demonstrate that as well. So if I'm going to do a market move, instead of a pending order, let's say I think it's at the resistance here that I drew here, this resistance level, and I think it'll drop, then it might make sense just to do a market move. And so let me just refresh this. The gold is having a little trouble loading. There it is. Okay, so if I prepare then a sell, market move, stop loss, maybe I put above the second resistance level. Remember, there's this old support level that it broke below, and then there's this old resistance level. So this is kind of a gray area in here. It's two price levels that acted as resistance here and support here. So if I'm selling, maybe I put my stop loss above both of those. just an idea. So that would be maybe at 1975. Okay, so then I go to my take profit and I say, okay, I just want to get to the low that it already hit right down here. So just before that low is 1900, okay, 1899. So my screen reset. I'm having a little connectivity issue. Apologies. 1899, so 1900 even for my take profit, okay? And my stop loss, okay, it's still programmed. I put my stop loss, no, 1975. It did reset itself. Sometimes that happens, but you can always fix it. Okay, there we go. So you see my potential profit is much nicer than what I'm risking. And I've even given myself 2 resistance levels before I put my stop loss. So I can really stay with it without risking so much. Now, if I know I'm willing to risk 250, like I said, then I see the possible loss to that stop loss is listed, so I can go a little bigger, 0.08, 0.09. Okay, so between 8 and 9 ounces gives me the amount of risk that I had said I was looking for. So let's go a little less instead of a little more. And so I'm risking 236 or so to make 363 or so. And if that's how I like it, I've got it set up, and that's it. Market move. It's ready to go. Okay. And so we've got Euro GBP, we bought on, gold, we sold on. And the opportunities there for pending orders as well. Like I said, on the gold, if we bring that up again, on the gold, what we could do is look at these price levels and say, all right, even if our initial move is in one direction, our backup move can be in the opposite direction. So even if you're selling on gold, like we did here, okay, the trade that you do for a pending order could be above an important price level that you see, and you could have a pending order in the opposite direction in case the move goes the wrong way on the market move. Any questions? Let me pause for a second. Any questions on anything we covered? You also could give a suggestion. We have enough time to look at one more instrument before we end things. You could give a suggestion for something you might want to look at. Okay, I'll go with the first one that popped up, Bitcoin. Not everyone can trade the cryptocurrencies with us, but most regions can. So let's go ahead. Let's take a look at Bitcoin. We'll pair it against the USD. Okay, so we're looking at 2-hour candles here. Boy, it's been choppy, huh? If you're trading on the cryptocurrencies, a lot of opportunities. Look at these price levels. It went here, then it broke clear down to here as a support level. Then it came all the way back up here to establish a new resistance, came back down to the same support, tested it a bit, and bounced back up again. So if there is some bullishness on Bitcoin or any of the cryptocurrencies that you're interested in, then you start looking at price levels and you say, okay, if it is going to go up, the first spot I would look maybe for a take profit could be this resistance level here. Okay, so around 42,500 looks like it has potential to try and test that level if there's bullishness on the market. Now, if you feel the opposite, that hey, USD might strengthen again, the cryptos could get pulled down further with the fears that's going on with the Russian-Ukraine situation. So if that's how you feel and that there's bearishness, then you see the support level that it keeps testing is right down in this zone down here. Okay, tested it how many times? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. About a dozen times it's tested this price area down here and come back up eventually each time. Now, so if you think it'll test it again, then you could be selling with a take profit down around 39,000. So it's your guess is as good as mine which direction this will go for sure. And if that's how you feel about it, then maybe you don't trade on it, right? Or you use pending orders. And so the pending orders could be at the prices that you're more certain about. If you're more certain that if it does get near this resistance level, that then it might come down, then maybe you put a pending order to sell from up here. And if you're more certain that it'll go up if it gets near this support level, then maybe you put a pending order down here to buy if it gets near that support. And then just have your stop loss just below that support and your stop loss just above the resistance on the pending sell. That's an option as well. And that's usually the route I go if I feel kind of 50-50 about something. And the movement is halfway between the resistance at the top and the support at the bottom. Okay. But there does seem to be some bullishness with the cryptos and Bitcoin, specifically this week, okay, since Sunday or Monday. There's been some bullishness, and we see this climb on the 2-hour candles, up, 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 up. Okay, that's reflected in that bullishness. All right, everybody. Any last questions before we end things? Eric, you're asking why did oil bounce last night? Listen, there are a lot of fears and concerns about what's going on in Russia, or I'm sorry, in the Ukraine with the Ukraine-Russia situation, and possible disruptions to oil supply and natural gas supply if things get worse in that situation. So it could likely have had something to do with that, and then also the crude oil inventories maybe played a role as well. So looking at the supplies in the US, etc. All right, everybody, thank you for joining. Good luck with your trading the rest of the day, the rest of the week for that matter. My next session will be next Tuesday in the evening time, 6 p.m. UK time. All right, everybody, good luck with the trading. Bye for now. Thank you for joining.